Welcome, everyone. Today we have with us Alex Lazarow, who is a friend of the firm. We have collaborated on a couple of opportunities together. Alex has been a VC for a while. He's currently the managing partner of a fund called Fluent Ventures and is based out of the San Francisco Bay Area, investing in companies actually globally. And I think that will be an interesting part of our conversation today. Alex, thanks for joining us. And maybe I will start by asking you to go a little bit through your background, because I think that will flow nicely into kind of discussing VC, how you got into venture, and then what you're doing now.
Happy to. Well, so first of all, super fun to be with you both today. And thank you for having me on the podcast. My quick story, I'm Canadian originally. I live in the Bay Area, but grew up in a city called Winnipeg. My mom's Belgian, grew up in Africa. My dad's American, a big Eastern European family. My godmother's from Shanghai. My aunt is from Argentina. So I perhaps had no choice but to run a global VC fund.
Covering all the bases.
But I've been doing venture for about 12 years. I spent 5 years at the family office of the Omidyar family of Pam and Pierre Omidyar. Pierre's the founder of eBay, at Omidyar Network, doing financial services, impact investing. It was also philanthropy. One of my investments on behalf of Pierre was in a digital bank called Chime. It's become reasonably large. And the group that led the Series B of that, a French firm, Cathy Innovation, invited me to join. And I was there for about 5 years, leading the San Francisco office. About 2 years ago, launched Fluent. And happy to talk a little bit about our strategy, what we're up to. I live in the Bay Area. I wrote a book a couple of years ago called Out Innovate, How Global Entrepreneurs from Delhi, Detroit we write in the rural Silicon Valley, which came out with HBR, is now in a couple of other languages as well.
Yeah, we can jump into the global stuff, but I'd be interested in maybe getting into the story of how did you become a VC? Kind of what was your path there? You grew up in Canada. Talk about your early experience that led you into this path.
It's so funny. I could tell you an incredibly linear story about how I got into venture, and every step would make sense. But the reality is, I think, like a lot of careers, you kind of the story evolves a little bit. When I was an undergrad, I thought I would do a PhD in developmental economics, and that was my plan. And one of my mentors told me, "That's great. Go and do academia. But before you do, go and get some real world experience." And I ended up going on the Canadian version of Wall Street, of Bay Street in Canada, doing M&A. And at the end of 2 years, fell in love with the tool of finance. I was not in love with selling big Canadian insurance companies. But this is when Mohammed Yunus had just won the Nobel Peace Prize. Impact investing was starting. Tech investing was coming back. And I ended up doing my MBA instead, moved to the States, and came out of that with this thesis around what I'm doing today, or some version of this. Realized I knew nothing about nothing, and ended up decided I want to get a little bit more work experience, travel a lot, work in a bunch of different markets. Ended up at McKinsey, did some work in financial regulation, and then at the end of that, I started recruiting to go into venture. I wasn't even looking for venture per se. I think in my heart of hearts, I would have told you I probably at the time I was looking for growth investing, but it was very people driven. I had the opportunity to meet this guy Arjun Acosta, who is now the managing partner of Flourish. It's the team we were working on together at Omidyar, is spun out. Hired me to come join him, and so it was very people driven. I was really excited about working with him and the vision that he had for the platform, and so ended up moving to the Valley for that role, and that was 13 years ago now.
Well, a lot of things to dive into. First of all, congrats on the book.
Thank you.
A lot of things, but so tell us more about the book.
Well, so I was getting really frustrated in my day-to-day work as an investor, where I was seeing I had 1 foot living in the Valley and 1 foot investing internationally. I also, by the way, used to teach a class at the Middlebury Institute for International Studies, their MBA program. And I was seeing my students thinking about how do you build startups abroad. We were kind of helping them launch their companies. And yet everything we knew about startup best practice was still so rooted in a time and place, Silicon Valley and today. And for an incredibly narrow type of company that was asset light and wanted to grow incredibly fast. And what I observed was that the best founders around the world were executing a different playbook. It just looked different. They weren't, this was like 2019, like they weren't moving their whole team to one place and only targeting one little city in Palo Alto for their first customers. They were multi-market from the get-go. They were building remote teams. And so I decided to do something about it. And so that was the genesis of Out Innovate. I interviewed about 200 founders, about 100 unicorn founders outside of Silicon Valley, a lot of them outside of the US, about how they built their companies and what are the unique strategies that they had. And the book's not a recipe book. It isn't like do these 10 things and have success. It's much more of a menu, like a permission book of it's okay to build a remote first company. It's okay to build a multi-market team. It's okay to, I coined the term camel startup, but this notion of, don't blitzscale, build with resiliency and good unit economics from the get-go and things like that. And so that book came out right at the beginning of the pandemic. And it's been kind of interesting because right as folks were adjusting to COVID, people were thinking about how do you do remote? Well, it turns out a whole cadre of entrepreneurs have figured out how do you build resiliency in your business in times of uncertainty. And so it was actually a lot of fun to see the world shrink around some of these ideas.
Certainly timely. Is there another book in the works?
Oh man, I wrote book one before I had children. I now have a 2 and a 4-year-old. So I will write another one. I really enjoy writing. I have a newsletter and a Forbes column. I really enjoy it, and it helps me sharpen my own thinking about what I actually believe. So I could imagine doing one, but not immediately.
Well, Thanasis and I are both readers of the newsletter and the Forbes column. So do you want to shout those out too so that other people can join us in that?
Oh, I appreciate it. Yeah. So the newsletter is 99% tech. If you just Google my name and then 99% tech, it should show up pretty readily. It's about essentially what the book is about. How do you build technology companies, often with unconventional strategies that defy what Silicon Valley might tell you as standard best practice or conventional wisdom.
Do you know, I assume you know David Senra from the Founders Podcast?
By name.
I discovered him recently. And so your story about global entrepreneurs reminded me of him because in the way he got on to basically who he is. Founders Podcast is a podcast where he tells stories. He finds a specific founder and goes and researches that founder through autobiographies, biographies, and other materials, and then tells the story. And his own, he was speaking in another podcast, and how he started, the light bulb that went on for him was that he heard somebody interviewing Elon Musk at some point, and they were asking Elon Musk, how did you never went to business school, how did you figure out early on how to build a company? And he goes, well, I read a lot about other entrepreneurs and other people and other innovators. And so your story reminded me of that. Is that part of, did you talk a little bit about what you learned through that process, maybe by interviewing all these global founders and how they might be different than entrepreneurs that are in the US?
Yeah, but by the way, I've often thought about pivoting or at least making one of the sections of my newsletter be literally here's a book that I've read. I read a lot, probably like you guys. Here's a book I read. Here are a couple unconventional things, and have a forum around book review and conversation, because I think there's a lot of insights. In terms of what I learned, it was surprising to me how I felt like the best entrepreneurs outside of Silicon Valley, and by that I mean Chicago, had in common with people in Detroit or in a bunch of these other markets when I was interviewing. So as an example, I interviewed the founder of Grubhub as part of it. And I often think of food delivery as incredibly spend heavy, burn a lot of money. And he talked a lot about how in the journey in the early days of Grubhub, the company was profitable at virtually every fundraise. And every single fundraise was for a very specific purpose. And in the book, I talk about the cash burn cycle. Imagine a J curve, the typical Silicon Valley company might have a deep J curve, and then maybe one day it will become profitable. Let's hope and pray. But that in many other ecosystems, the J curve was more of an S. They would get unprofitable, figure out some product market fit, get to a point where they were ramen profitable type thing, and then figure out what they want to do. And if capital is available, because it wasn't always, they would then do another spurt, etc.
Yeah.
I saw those types of phenomenons repeat themselves. It wasn't a best practice, but actually just a reaction to the constraints of the ecosystem that led them to the strategy. And then the result of that strategy was actually these weird advantages. They were profitable, they controlled their own destiny, they were more resilient in the downturn, etc. I thought it was really interesting to see these stories kind of repeat each other and develop without that much conversation around.
did that influence? I know you invest, maybe we can talk about your investing strategy a little bit at Fluent. I know you invest a lot overseas. What influence did what you learn through these interviews have on your strategy?
It's interesting. In some ways, one of the chapters in the book is the fund strategy, and a lot of the others are kind of influences to how I think about the world of investing. But the strategy for Fluent is, we call it geographic arbitrage. But if you look at the number one tech company in any market around the world outside of US and Europe, think India, Korea, China, Africa, Southeast Asia, Latin America, whatever, the number one company is the same. They are all Amazon for X. By the way, the number 2 to number 10 is generally the same. Some combination of a digital bank, buy now, pay later, Uber for X, whatever. And our thesis is that will probably continue. Like, there are now 150 cities created unicorn around the world. There are elite teams spinning out of these companies, getting funded by top local VCs, like the equivalent of Sequoias in any single market. And it's going to be easier than ever to continue doing that. And we think there's an opportunity to be a horizontal platform that co-invests with the top local funds on a narrow set of these ideas. And we'll take a couple bets in the same category. We'll try to connect founders. We'll try to have a strong perspective on what it takes to go from a seed stage to an A to a B in that model, having looked around the corner on it a couple of times. So that's what we do. In the book, I have a chapter called Cross-Pollination, but this notion around, hey, like, some of the best ideas come from anywhere and scale everywhere. I'll give you one just funny story from the book, which I think just also shapes how I think the world of innovation is changing. It used to be that all the best ideas came from Silicon Valley and were like straight up copied in other markets, right? Like Rocket did this in Europe, for instance. Today, that's playing out differently. And so the story of Uber, for instance, is interesting. Like Uber wasn't even the first. It itself adapted another company in Silicon Valley. But very quickly, local versions of Uber popped up everywhere. In Indonesia, the number one version of this is a company called Gojek. It isn't taxis, it's these motorcycles. But when I interviewed Nadeem, the founder, he talked a lot about how his vision for the company was, in the morning I'll drive people to work, at lunch maybe I'll drive them home, and dinner I'll drive them home. But during the day, I want to deliver food, be the cash in, cash out network, mobile banking. I want to deliver doctors. He essentially wanted to be WeChat or a super app type program. And by the way, no surprise that Uber's second biggest product now is food delivery, right? Like, some of these things ended up kind of going back and forth. I think that's what's happening today in innovation, is people replicating, adapting, learning from each other, looking across borders, and then that's coming back and forth. I think we're going to see a lot more as borders become more closed. The ideas will become much more porous.
Do your investments, and or interests tend to concentrate in one geographic area? I know that you've, done a fair amount in LATAM for fintech, but would love to hear your thoughts on that.
We're truly global as a firm. About a third of the fund is North America, developed world. I expect about a third of the fund will be in LATAM. That's been a really big area for us. We have investments in Europe, the Middle East, Africa. We're looking at a ton of stuff in Southeast Asia. So we will be global, but where we are incredibly narrow, like we have a wide aperture on geography. We have an incredibly narrow aperture on business model. Like we pick every quarter, not like we're going to do fintech and prop tech. Like, we pick an actual business model. Like, I'm really interested in how ramp works and how corporate spend management works. That model might be applicable in a bunch of geos. And then we go out and try to meet every company in the world that does that. And if we make a bet, it'll fit in one of those kind of things that we're looking at in any given quarter. And so we ended up being reasonably narrow in terms of the actual scope of what we do. I'll put one last point on the geo point, is that if you look at the 150 cities that have created a unicorn, actually 80% of them come from about 20 cities. And it's the places you might expect. Like in LATAM, like 80% of unicorns come from Mexico City, Sao Paulo, like that kind of. I expect the geographic mix of where we invest will mimic some of that too.
Is there a particular area that you think is outperforming? I mean, I'm thinking, for example, we have collaborated on a company in Africa, Sabi, right? In Africa, I know you looked at a bunch of things, and when you look at the macro trends there in terms of population growth and GDP growth and all those things, I wonder if you're more excited by certain parts of the world than others that are maybe less developed, and where you find the best opportunities?
I wouldn't be a good former consultant if I couldn't put things in a 2x2 matrix. But I think there's something to like the macroeconomic demographic shifts that you talk about, right? And like certainly Sabi, which is kind of a B2B marketplace, kind of enablement platform across Africa, will benefit from. So I think that's like one axis we care a lot about. The other is like the hype factor in some ways too. I think there are certain markets around the world where you say, hey, look, the demographics are off the chart. They're amazing. And also the valuations look a lot like Silicon Valley. And so that's a little bit less exciting. And so, for instance, I've walked away from a lot of deals in Brazil recently because like amazing entrepreneur on a great category in a model we know quite a bit with really attractive demographics around that idea. But the valuation was on par or in some cases worse than a comparative deal we've seen in the US. And like that risk return is a little bit tough when you also factor in currency, et cetera. But it is, we are really bullish on LATAM. We are really bullish on a couple of these ecosystems around the world, but we try to be very disciplined on entry price and really kind of coming in alongside the top local seed funds or A funds and before the big kind of Silicon Valley kind of players.
So on that note, I mean, how do you kind of utilize the local market, both from deal flow, understanding like any changes in the regulatory environment? Like, how do you think through that? Because obviously, you're covering a very wide, swath of area, right? So sometimes it can be difficult to make sure that you're up to date on, everything, that's going on in Brazil, everything that's going on in different areas of the world. How do you utilize I guess local networks, both from a deal flow perspective and from, staying up to date on anything that would affect a potential investment?
Yeah, like I've been to Sao Paulo 15 times and about the same in Lagos, Nigeria. And I can tell you something with absolute certainty. Like I will never be better than the top local investor in Sao Paulo or in Nigeria or whatever, with 0% probability. And I think for us, it's really important that, while we have a very strong view on the particular business models, we approach the markets with a lot of humility of understanding that we actually know very little on that. And so we try to mitigate this in a couple ways. And one way is structurally, the type of deals we like doing are where we are the second biggest check to maximum co-lead, never lead investor with a local fund. So we don't like investing with another Silicon Valley fund on their LATAM adventure. That's not our deal. We like co-investing with like our friends in Brazil or our friends in Mexico, et cetera. So that's one structural way that we do it. Two is we've tried to build an LP network. We have about 50 unicorn founders and tech luminaries, about 20 VC funds or their GPs that are LPs in Fluent, and now kind of a growing set of institutionals in every market like that we're really trying to focus on. And as we make decisions, we actually try to tap the expertise of that ecosystem where we're bringing a perspective on the business model, but they're also bringing a perspective on the locality and the fit with the market. And the two of those, hopefully compared with just the nuts and bolts of the operation, like, hey, like I've seen this thing work in a bunch of other places. Here are the actual cohort performance numbers. Like the numbers don't lie. Like, is this thing actually working? We try to combine those to kind of develop conviction around ideas that we like.
Right. And do you find, I guess, on the flip side of that founders and management teams are interested in your investment? I mean, one, because you guys, you're a great person and obviously have, incredible acumen, et cetera. But do you find that they're looking for, assistance and added value with the US side of things, like any contacts, customer relationships, et cetera?
I'd like to think it's mostly my charming Canadian personality, but
obviously it's that. But
what I tell founders is, look, I'm a VC. I have a portfolio of companies that we invest in. You should too. Mm-hmm. You should get backed by the top local fund and have on your board seat, hopefully one of the leading operators in that market. And by the way, maybe you should have an industry fund that's a specialist, but you should definitely have someone like us that lives and breathes your business model. And I won't know their business better than they will, but my ambition, my hope, our dream is that we will know certain aspects of it better than they will, or at least we will have seen it. And so, for instance, we were talking about B2B marketplaces. One of the things that we've helped a couple of our companies, like, how do you think about financing in the flow of a B2B marketplace? Who are the 5 people that might do that debt deal and why. Right. Where should you structure it and how? And like, here are 5 people you talk about. We think like that's value added. We think having someone in Silicon Valley that might open the door on the next couple investors in the US at least. And then lastly, the growth guys will have seen, proof. You guys have a great vantage point. You will have seen a ton of these companies around the world. We want to try to help the companies we work with and say, hey, look, the next round of funding, this is what they're going to say is great. Like, this is what we need to work on. And so we like working with our companies with a little bit of a sober lens, having seen a little bit of that,
right?
Hopefully ahead of the local guys. And that's where we like to fit in and be collaborative co-investors.
I would imagine if you have such a broad lens, I mean, you need to spend a lot of time on a plane, right? Like traveling around, meeting with investors. I would imagine, I mean, it's gotten easier, right? With Zoom being a tool that you can use, but nevertheless, it's no replacement. And especially in a lot of geographies, there's a preference to meeting in person and getting to know somebody before trust is established. Is that so? Can you talk a little bit about that? What's the dynamic of working in so many geographies?
It's 100% right. And the average venture relationship is longer than the average American marriage. And so I think the opportunity to get to know folks and build real relationships makes a lot of sense. I think philosophically, most of the founders we backed in the fund so far, I've known for 6 months before we've invested. And we have an opportunity, and we do some pre-seed occasionally, but like stylistically, I don't like doing it. I like getting to know a company, right after inception, and maybe come in as part of the seed or an extension to the seed extension, or maybe as late as an A. We don't need to invest as part of a round. I'm actually very happy to kind of come in alone, separately, but get to know a company over time. So I think that's stylistically a little bit how we end up working. I travel a ton, but Zoom has made it easier. Like, I used to go to Sao Paulo once a quarter to just be in Sao Paulo, or once every 6 months. I don't feel the need to do that anymore. I can wait until I have something that I'm so convinced on, and it's meeting number 4, and we've already done references, to go and just spend a lot of time to both get myself to conviction and our team on conviction, but also, spend time getting the founder to have conviction on us. And so I think we could be a lot more targeted now. And so I travel, I travel too much, and also the right amount, and thankfully less than perhaps I would have needed to do this job 10 years ago.
So you must have some good mileage points at least,
Oh yeah. I concentrated all in United, and so I'm hopefully a reasonably good customer for them.
That's good.
You're a lifetime K1.
Yeah, exactly.
Well, you were alluding to this, Alex, and I'm curious because about, in the U.S., or actually globally, a lot of people think the U.S. is the innovator. It's the first kernel of an idea starts here, and then other people try to copy. You kind of alluded to this, that sometimes you see that going the other way, where a company in the U.S. will see something happening overseas, and then copy it here. Can you maybe talk about a couple of examples of innovation going around the globe, in either direction, but just to give us a sense of what you're seeing?
Yeah, and first I'll give you one numerical data point. The largest digital bank in the world is in Brazil. The largest edtech in the world, although troubled, is from India. The largest super app in the world is from China. Like, the list goes on a lot of these, where not just there are great unicorns, but literally the greatest company in the world, or the biggest by valuation, is from another market. In Fluent, we've invested in a number of these B2B marketplaces that are not replicating American-style companies. We're actually replicating Indian ones. So in India, of the top 10 private unicorns, 4 of them are similar models. They are B2B marketplaces that combine embedded fintech and software. Imagine ERP, inventory management, whatever. One happens to be around manufacturing, a company called Zetwork. One around construction goods called Inframarket. One around industrial supply with financing called Off Business. They're similar models adapted to different industries. A few of them, these are actually going to go public next year. Those models are actually getting replicated around the world in different places. And one investment we recently announced was in Prima, which is a Mexican business that is basically taking Zetwork. Zetwork has helped with manufacturing, in India, as people are trying to shift production out of China to China plus one. How the heck do you like figure out where to start in India? Necessarily, like, does that work as a one-stop shop to do that? They look like the biggest factory in India, but in fact, they're a decentralized factory with thousands of folks using their system. We think with nearshoring and friendshoring, Mexico is a really interesting place for that to happen, and that was a part of the thesis of partnering with this amazing team in Mexico. But I think that's one of the things that's pretty exciting is we're seeing ideas that are truly de novo, although, in some ways they're borrowing from others, but are emerging kind of in emerging markets and are getting copied elsewhere. I'll give one other kind of Indian data point, which I think is really exciting. People I don't believe are talking about enough. In the US launched FedNow around like real-time free payments. It's had almost zero take-up so far. India launched Aadhaar and UI, like universal ID plus payments plus a stack of APIs on top that have been developed, which have had radical adoption. Brazil launched Pix, which is free real-time payments, which has had, like, everyone uses it. It's radical adoption. That is bubbling up in a bunch of other emerging markets now. So we're actually seeing some really interesting, like, real-time models that are not coming from the US. That, by the way, the US is going to try to learn lessons from. FedNow will probably need to borrow some of the lessons from some of these other markets, and so I think it'll be pretty exciting in this vantage point for the next couple of years.
How, if any, because I don't want to presume, has the change in guards, with Trump coming in as president for the next 4 years, changed, your view or thoughts on potential hurdles, opportunities with investing broadly?
Look, I'm a venture capitalist. By nature, I'm perennially optimistic. But I do think that as borders go up around the world, and that's not a US thing. This is like many markets around the world thing. As borders start going up around the world, I think this phenomenon that we're going to see local winners dominate markets is going to accelerate structurally. I think we will see that play out. And so this phenomenon around geo arbitrage, which is kind of effectively our bailiwick, I think is going to be a really big deal. And as many industries get restructured and rejumbled, I think technology is going to play a role in solving that. And I think people are going to look around the world for other ideas of things that are working with a similar problem. So I think that's my lens around why I'm perennially optimistic, but optimistic in this specific scenario.
Now that we're in, the new year, and I think you wrote a recent, newsletter on this, but what are some of your predictions for 2025?
I'll tell you some of my hopes, and then we can talk about predictions. I think prediction. 10 years ago when I started venture, 100% of the Midas list was from one city investing in one country, effectively. Mm-hmm. It was like San Francisco or rather Sand Hill. This year, something like 25% of the Midas list was in China, 25% of the Midas list was around the US, outside Silicon Valley, and 25% was rest of the world. I predict that in the coming years, we're going to see that shift like continue in that direction. Like, it's amazing how much has happened in the last decade. But I think we're going to see that in a big way. I think hopefully 2025, we're going to see the IPO window reopen. I think we're all hoping for that.
Here.
Yeah. But I suspect there's some momentum in the public markets. I think it's starting to be a more interesting place. And I think with that, we might see a pickup in some M&A of like not the private equity style, but like strategic, high value, momentum M&A. And so I'm hopeful for some of that. Right. In the piece that I mentioned, I wrote about stablecoins. I bought my first Bitcoin in 2013 or something, but I have never invested someone else's money into crypto because I had not yet seen something that I was convinced was way better than what was kind of existing already. Mm-hmm. We were going to make our first investment in this space around stablecoins and stablecoin infrastructure in emerging markets.
Can you say, actually, I'm curious about that. I mean, I would imagine that has to do with, when you invest globally, you have companies that are maybe growing in the local currency by 100%, but then when the local currency is devalued relative to the dollar, maybe when you show it to U.S. investors, it's like 30%. So does it have to do with that, and how would that work?
I think to me the stablecoin bit that's interesting is, right now correspondent banking, the way it works is, if I have a bank account at X bank and I want to send money to Bangladesh, it will go to a JP Morgan account, like where there's mutual accounts. The JP Morgan account might have an account with the biggest bank in Bangladesh, which might have an account with the other. And so there's a lot of middlemen built in. But if you have a setup like a stablecoin, and by the way, like Ripple has been trying this, and there's a bunch of other systems, you only need one single bilateral API into that, and then it gets transferred within crypto land, and then kind of one other bilateral. And so you can imagine much simpler chain. I don't think it solves the problem you mentioned, which is, I think stablecoin is merely infrastructure, but I still think the businesses will still be doing business in whatever the local currency is. Like they'll be selling to mom and pops or consumers in that place that won't want to buy in crypto. They'll be buying whatever. And so I actually think one of the challenges with our strategy, I think there's a bunch of advantages. One of the challenges is when the US dollar goes up relative to everything else, like it actually does compress returns. The converse of that, by the way, is for a lot of companies, particularly in the early phases where we invest, is that actually increases runway often because local costs go down. Decreases risk in that way. And then two, it
makes it also cheaper for you to buy stakes, right?
Cheaper on valuation for sure. And so we try to make sure that when we invest in a company, like we factor that risk into kind of the valuation price and the runway and all this, but for sure it's something we think a lot about.
How does AI play into this global investment climate? We recently looked at a company where it was interesting. It was a very ambitious AI-driven play, and they looked around. They wanted to find the best engineers, and they thought that the U.S. market was very competitive in terms of finding talent, and ended up locating the company in Europe because their theory was they can attract better talent. There's not as a competitive market. So have you seen AI play a role in some of these global businesses that you're funding, and if so, how will it affect it, and maybe in the future?
We talked a little bit about kind of what is Trump going to do for geographic arbitrage, but like what will AI do is actually, to me, one of the most interesting things. It's becoming easier than ever to launch a company anywhere on the planet, to say, hey, I want to build this idea, translate it to this thing in this model. Anyone can do it more and more with less and less technical background. I'm actually quite bullish on this and the ability to launch companies much more cheaply and much more rapidly. We have, as a firm, not invested really in the category of AI for X. Like, I was an early investor in Chime. Like, Chime was the digital bank on a mobile from, the Four Walls version. Like, is there going to be an AI version of that? Like, I'm not really convinced. Like, I don't think it's a platform shift. I do think it's more. Sure. I think to us, we think it's more akin to SaaS, right? Where no one today says, hey, yeah, we're a SaaS company that uses Amazon Web Services. Like, obviously, everyone just uses that. Every single one of our portfolio companies is using AI on back-end coding, front-end customer personalization, internal operations. We are too, by the way, internally as a fund. And I think VC funds will have to really build that into their workflows in meaningful ways. So that's the way we've been looking for that, and we're trying to back teams that are thinking in that way too.
Any other areas we should touch upon?
Man, we've done a full tour of the world and many many different industries. I'd be curious where you guys have such a wide purview. I'd be curious how you guys are seeing it.
I mean, from our standpoint, we would love to do more deals internationally. I think the challenge has been kind of the regulatory regime, and our back office says that, hey, what do we know about doing deals in India and Latin America? And so we've been fighting that fight. For now, we're kind of staying with companies that have been incorporated in the US. But, over time, I think, because the opportunity is so big, you have to become more flexible.
Yeah.
Are you seeing more of in the US, Delaware is kind of the standard, right? You go to Delaware and, everybody knows what that means and everybody's familiar. Are there standards developing overseas? So maybe in 5-10 years, you're going to say, hey, I know how to operate in Delaware and Singapore and wherever it is in Latin America. Does that make sense?
Yeah, and I don't think it's been 5 years. I think those standards effectively exist today. In Latin America, 80% of deals are done what's called a Cayman sandwich, but a Cayman top co, a Delaware middle co, and then a local company below. In Africa, I see really a mix of two, Delaware and Cayman. In the Middle East, one of the fastest growing is Abu Dhabi, and that's becoming a standard. By the way, a lot of these are really modeled around Delaware law anyways. In Southeast Asia, Singapore is really the standard. And so we're really seeing a lot of coalescing around a narrow set of things where you can feel confidence around the rule of law. Like, I'm not investing ever in a Brazilian topco. Like, we are investing in a Cayman or a Delaware or something like that. And the same is true, right? Like, we're never investing in a Nigerian topco. We're investing usually in a Delaware topco. And so I think that already exists today, and there's a lot of best practice around it in literature that gives us confidence, at least around that set of risks.
How often do you play the guitar?
The guitar is mostly for show. That is my wife's guitar. We have a piano upstairs, which I play.
Nice. Okay. It's a good looking guitar. So
yeah. It's purely office aesthetics put here at this point.
How do you feel about Canada becoming the 51st
Oh,
state?
No.
I thought you were going to ask that after I brought up Trump, but yeah.
There's a really interesting article in The Economist around making the argument that Canada should join the EU. And I was like, everyone wants Canada all of a sudden. But yeah.
Not excited. Trudeau turned it down. And it seems like Canada has had its own challenges over the last few years, but things are changing there as well, right?
I think one of the things that's been pretty exciting, by the way, just from the lens of tech in Canada, is I just remember growing up in Heartbreak City, where every one of the darlings, like Nortel Networks, was kind of the big company, went bankrupt. We had BlackBerry, which really defined a whole generation on mobile phones, went bankrupt. Like the inventor of the word processor, Corel, went down. And then there's a whole set of companies that had to move to America to succeed, like Slack and others. But what's exciting is I think we're starting to see some real standalone technology companies getting built, particularly out of Toronto and Ottawa, and Shopify obviously is a nice exemplary of that, and staying in Canada. And so I made the argument to a friend of mine that I stand by, that the top ecosystem in North America is the Bay Area. Arguably, maybe New York is the second, and I would say Toronto is the third in North America by ecosystem strength. And they debated me on it, but I stand by it. I actually think it's a pretty interesting place now.
I love the way that you guys say, you guys Canadians, SORRY.
I don't, I say sorry. What's interesting is
wait, I don't know this. Say, how do you say it?
Sorry. We say sorry, but Canadians say sorry.
Sorry.
What's interesting? So Canada, like America, is a massive country.
Yeah.
And so there are a couple of things a lot of people say, like A and whatever, but actually accents vary quite a bit.
Yeah.
As you go across the country, just like in America, we have the South, whatever. Yeah. And so actually, like I Manitoba, where I grew up, we're very close to Minnesota. And so I actually think our accent probably sounds a little bit more like that. But when you go, obviously Quebec has its own very Francophone accent. The East Coast, the Maritimes, where like some of the stereotypical things come, like sounds that, but like in Calgary and BC, actually much more proximate to what's happening in like Washington State, perhaps, or whatever. And so there's actually quite a lot of variety, which is kind of fun too.
Yeah, no, I'm sure. I didn't mean to completely overgeneralize that. My samples, like my data set for that is every single Canadian I know, and I have a couple of very close friends. They always say it that way, so it's I love it.
It's okay. You guys are welcome up in Canada anytime.
If you had to leave the U.S. and you had to live somewhere else, where would you live? Would you live in Canada?
Probably, yeah, Canada's home.
Okay.
Probably live in Canada. I think, given what I do and the amount of time I spend on a plane, the most logical place, if it wasn't the Bay Area, would probably be somewhere like London, that I can fly
Okay.
direct to anywhere on the planet. Like I think that's probably the most logical place.
I like that you have logic embedded in this. I know exactly where Thanasis would live, which also has logic too, but
Which is where?
Greece.
Well, Greece, yes. Greece, great. Although I love Paris. Paris is my favorite city. I mean, you can't
That'd be so
compare
nice.
it. Where's the best food? You've flown to all continents. Where's the best food?
Or Friday night for dinner, I'd probably crave some like a Japanese food or Thai food or something like that. But I grew up in a French first language household with like a European family, and so for me, like French food is kind of what is what I truly
The
love
standard.
and I crave.
How many languages do you know? Because I feel like anyone who, if French is the first language, I feel like there's always like at least, a couple in there.
Yeah, just French, English, and Gringo Spanish, survival Spanish.
Okay.
Survival Spanish. I love that.
Survival in a couple languages, but mostly Spanish. Yeah. Thank you for having me on the podcast, for being just wonderful partners for Fluent,
Yeah.
and you guys are just a pleasure to get to work on, and looking forward to doing more deals. That's my last prediction for 2025. Hopefully, is we've got a couple more things to work on.
Love it.
But yeah, excited to be on this together and collaborate.
Alex, we really appreciate your time and are excited to always compare notes and find more opportunities to work on with you. Thank you.
Sounds like a plan. Thank you all.